Okay, I think we are live. If anyone is currently watching live, can you just drop a message in the chat just so I know the screen is coming through and everything is hopefully great? Testing, testing, 1, 2. Can you guys see my screen okay? If you can let me know, that would be awesome. Thank you. Is there anybody out there? Right, let's just get it going anyway. I don't know if anyone's watching or anything like that, but what's the stream health like? Stream health seems good. Chat rate, I don't know what that means. Stream health, no data, so don't know if that's a good or a bad thing, but hopefully if I just move this here, does that move if I do that? How much is that delayed? Let's see. Yeah, seems alright. Okay, right, we're gonna crack on. So what are we currently looking at here? So this is Bitcoin's price, obviously, and rather than just dive into kind of current price action, I thought it'd be good to kind of just go over what I'm looking for, and when I'm putting these dots on the page, what am I trying to figure out? And so I've reversed or replayed back to, when are we, 23rd of June, and we're just going to play it through a little bit, kind of get a sense on what's going on, because the way I see this, and the way perhaps we all should see this, is that whenever we are approaching the market, our job as analysts is always to understand relative strength in terms of where we are to the swing, whether that's the major swing, an external swing, or where we are from an internal position, whether we want to do some sort of, let's just call it, just kind of more day trades and in and out jobs rather than more of a swing range. So let's just see what happens. You can see these dots here. What these are going to suggest is if it's red, we're in a downward move. That means we're creating lower lows, lower highs, lower lows, lower highs. The moment we break that swing structure is where we put a change of character, right? That's where we have changed the direction of the move. And so what we're always looking to do is to make sure that we're always on point with understanding where the market's being driven. Once you get to that point, anyone as a trader, let's just say, it gives you some real confidence to know which way, or the higher percentage likelihood from a probability perspective, that the market could go. And so that's the reason I want to kind of move back a little bit, because by moving us back, you can kind of get to see the thought process of how we're going. So we're just going to press play, and you're going to start to see what these dots signify here, right? And why we pick specific points over others. And let's go. So we're just going to press play, and we're on the 15-minute at the moment, but I've got a little bit of time on my side, so let's just get at it. So you can see here the last move, right? Just to take this a little bit further back, was we made a, move that up a touch. We made a lower high that came from there. So again, you're just moving this back. So market structure wise, lower high, lower low, lower high, lower low, lower high. And so each time we do this, every single time we do this, what are we expecting? We're always expecting for the lows to break, right? The weak lows rather than the strong highs in this case, because it's the swing structure. And so oftentimes what you tend to find is the higher the time frame, the more difficult it is to break these kind of more stronger highs or lows, whatever they would be. And so market structure, as we were kind of looking at it, is, you know, it's up here, down, lower, lower, because we've broken this here to the downside. But effectively what happens is we then get this move to the upside here, which what breaks the change or breaks that lower momentum. And so now all of a sudden we flip, right? So we go bullish. And so the idea now is that let's see how we kind of move, because at this stage what you'll have had from a strength perspective is this here. This is the low at this point, right? And so this would have been a weak low as we would have seen it at this current juncture. And so we just change that and make it an external weak low, right? That would have been the low that we would have anticipated to break. However, the moment that we change character to this swing lower high here, all things change. And so we've got to be mindful of the fact that this is no longer a weak low, but in fact a strong low, if that makes sense. It's an important concept to understand. The moment you break or change is the moment that you have to understand that. From a market structure perspective, this now becomes the strong low because we've broken this structure. What we're effectively waiting for is does this hold on market structure, and then that's what we'll see. So I'm going to change that to a external weak, external strong low, right? Okay, and the weak would have been here, right? So what would we do again? Nice and easy, because it's action that we want to see live, right? This just becomes a new weak high, right? External weak high. And so let's just see how we go. And this is, if this was live data, this is exactly how I would analyze the charts each and every time, looking at my swing ranges. Right now I'm not looking at internal structure at all. I'm just focusing on the swing, right? We're going to talk a little bit about supply and demand and how we can effectively look at taking orders, and when we get into kind of management of the trade. But for now we're just focusing on market structure. Okay, so let's play. Okay, so now what happens? Now we've broken the weak high. We absolutely expected the weak high to break because we've changed our structure, right? We've had to change the character. And so now we move this up here. Okay. And this is the external weak high. And what? Again, we expect this to break, right? I think for the purposes of this, let's go to the 1 hour just to keep it a little bit faster. You can see all of this here. It'll become a lot more obvious when we get to that level. But for now, we are just purely speculating on where things are as an analyst, right? That's our job. Let's just bring this back a little bit so we can just see nice and clear. By the way, guys, yeah, good. Thanks, Roxas. Good man, good man. Let's just respect. Is the screen resolution okay? Does it look okay in the screen? So just to double check here, we've now moved to the 1 hour time frame, right? All I'm thinking about right now is, okay, I anticipate that this is the external weak high. External because it's the swing, right? It's not internal. All of these higher high, higher low, higher high, higher low, higher high, higher low, blah blah blah. I'm not interested at this stage. This is my swing range, right? The main swing external range. We're going to cover the internal stuff when we get closer to the price action, but for now I can't delete all of these because this is only previous analysis, but I just want to show you each time how we're just mapping this out, right? Continue playing. I would anticipate the price is going to come into this premium range here, right? So look, whenever we're talking about the swing, it's always relative to the swing, right? So this is where we expect price to eventually come down to from a swing perspective. Of course, right now you'd be thinking now's a good place to start shorting when we come back into a supply zone, right? That's always what the mind and the process needs to be. But for now, let's just continue. Can delete that. So price is now starting to make higher lows, lower highs and lower lows. And then we have a nice little liquidity jump there. So again, now from a structural perspective, now we've got our lower high. This is still our strong external high. That hasn't broken yet. This little liquidity punch here does not count. We didn't close above the candle. Now remember, from our perspective, I'll bring this back up. From a swing, we are not interested in any buys at this stage, even though we know that this is an external weak high, which will just extend. From a swing perspective, there's no value here yet. There is no value, so we don't take. If anything, we're probably looking for kind of small scalps, right, in and out job. We're not really thinking about any kind of swing-based moves because we just haven't got the value there relative to that swing. So every single time we need to always be mindful of where we are relative to the swing. This is the lower low. This is the low. This is the high of the swing. Everything else is just internal price action. Even that little wick there didn't count because it didn't close above. Just a home for liquidity. You've got to remember, where's all the liquidity being built? Just up here. Of course, we do anticipate that this breaks, and we know it breaks with this dot, but we're not there yet. Okay, so now we have a new swing high, which is there. And now we can bring our low here. So the swing range has really reduced. You can't move your swing up to the low until we break the higher swing. So now that we've broken that swing, can you see the distance between the new range? It's absolutely tiny in comparison to that previous swing. But the way you do your swings is that you always say, okay, well, where's the 2 points? Where's the lowest point between them? It's here. So that's our new swing low, and this is our swing high, right? So let's continue. Now what we'd be looking for is, if we come down to here, potentially because we're in that higher move, but the main swing is still down here, right? The main, if we were to zoom out to like the 4 hour, perhaps the swing range would still be here, the major swing. And so we do anticipate price coming down. I mean, if I go to the 4 hour, you can see that's that swing low there, denoted by red. And so eventually if you take that kind of same range between here and here, we want it to come down here, don't we, when we want to start taking that major swing. But for now, we're not there yet. So green denotes bullish. Obviously, we need to break that in order for us to think about going any before we're thinking about shorts. Okay, so let's go back down to the single hour. we're going to get into the trade execution phase shortly. I just want to bring you all up to date with kind of where we've been at. And I've taken a lot of trades. Now, see, so let's just take a pause. So now we're into that premium, right? And this is the strong low. We don't anticipate the low to break. We should never anticipate the low to break until it does. Of course, the low will always break eventually. But from our perspective, thinking of the trading opportunities, once this low was created, let's just show you what we do. So when you have that low and you've got your swing low, which you know is strong, you're looking for what? Trading opportunities to the upside, right? And so how do we anticipate where those opportunities are? I'm just gonna look a little bit to the left. We're always looking for, let me go to the 15-minute, right? We're always looking for supply and demand ideas, right? Which are effectively where you get parts of the market that effectively cause you to get an excess one way or the other and create that kind of imbalance between buyers and sellers. I'm just going to take this off the chart really quickly. Where's that? Let's get rid of that. So what we're looking for is, now that we've got our low, do we see any opportunities down here that give us that idea that we may come into a supply zone or a demand zone rather? And so, you know, just moving the chart back a minute, let's go here as an example. Do we see anything here? Like, for example, right, we have a small inefficiency here. We have a much larger one here. Okay, so this inefficiency is where there's a lot of excess that comes into the market. So buyers massively and overwhelmingly outweigh sellers. And so oftentimes that means that orders don't get filled. And so from a market's perspective, central exchanges perspective, their algorithms and stuff like that, they'll always try to give fair value and oftentimes will come back down. And so that's, you know, you can see we don't trade the fair value gap or the imbalance. For me, we always trade the first candle that creates that imbalance, which is here. Now you can see a wick come down, just missed that. I always like to go to the lowest time frame. You can do the 4 hour, you can do the 2 hour, but I want to try to get incremental, so I'll try to get as close to as possible. But you can see we didn't make it, so right now there wouldn't have been any trade on that. I wouldn't personally start trading to the high side, which was previously a weak high, because there's every chance that it can break, right? So you don't want to be, it's trading from a sign of weakness. So I would never really contemplate doing that from that perspective. And so let's just continue where we are. So price come into the imbalance, slightly overwicked it as well, just because it's liquidity, right? All the liquidity. So you think of all the people who will have stop losses and kind of high leverage trading in terms of the excess there is going to be roughly where you'd anticipate your stops to be, right? You can see there, if I just zoom in a little bit, this area is a magnet to where price would expect to go, just because everyone who's gone long will have the stops relatively close to where they are. So just from a liquidity perspective, you know that that's probably going to be a likely place. That's where I would go for my order, but my stop loss maybe somewhere down here, just to give you a bit of move, just below where the liquidity would be. And so we can see here, obviously, price did come down to that point and starts moving up. So this is, by the way, I'm not advocating that these are the A plus setups, but these are the ideas where, you know, you're looking for intraday trading, right? Where can we get into a potential? We expect price to come back down to the, what would be at this point the strong low internally, or sorry, external. So we're looking for opportunities to get back into the upside. This is the only place at this phase that I've seen any kind of imbalance, right? So that's what I'd expect for us to look at where price would come in to commit to and then start to come out. But let's see. We'll continue. Came back into the zone. On the 15-minute. But you can see here, right? The strong external high holds. Yeah, you can see the strong external low, my apologies, it holds. And we know where price comes to. It comes to this dot here because of my previous analysis. But whenever we're trading, we should always anticipate that this is the zone that we always want to have strength towards. So you're always looking for trading opportunities in the supply zones, sorry, the demand zones in and around wherever you're going to find an imbalance. And again, we'll come on to the imbalance in a short while. Be a lot clearer than what we're kind of looking at it now. Let's just skip to the 1 hour to speed this up a little bit. So price now breaks the previous high, the external high, which is obviously marked on the chart. I'm not going to re-put it up there, but now we create a new point. So again, thinking logically, higher high, sorry, lower high, higher high. This would have been lower low here, unmarked. Higher high. Wouldn't really class this because it was a liquidity grab, yeah, because it's, you can see, sorry, my apologies, let me just spin this out a little bit. Really, the candle closed here, so it was just a big squeeze for liquidity before the price up. So realistically, this is still that low, and in fact, if you look, it didn't quite there, so we'll get rid of that. We can move off from that. Now, that would have been a nice trade. The difficulty is, where do you put your stop loss? I mean, theoretically, we could have used this as a bit of a an imbalance, but for me, it got taken out by this, so that wouldn't have counted. So you're looking for your new imbalance. Of course, price does come down a little bit lower than what we would have liked, so maybe we would have got stopped out on that. That might not have been the perfect trade. But you can clearly see the strong low did hold well before it came up. And again, just like with anything, we don't have to be perfect with the market. We're never going to be perfect with the market. But all we're thinking at this stage right now, as we see things fit, is that we're only thinking about market structure and thinking about longs. Right? We got to break a structure on break a structure on this move here. Obviously, higher high, higher low, higher high. The new higher low will be here, and then the new higher high. And so really our new mindset is, are we going to break that structure or not? So let's continue. What I like about this method of trading, by the way, is it always gives you a level of confidence about how you should navigate markets every single time. Are we bullish or are we bearish? That's a very easy thing to work out. Is the swing bullish or is the swing not bullish? Right now, it's currently bullish as we see it today, but it can flip, right? And in the moment it flips, we ourselves need to change our narrative and start thinking about the opposite side of that market. So let's continue with price. Okay, wick doesn't count. And then we know eventually it does break, right? It breaks here to this downside. Okay, so what do we do now? So for time, we've been bullish for the first time in, that was the change of character to go bullish, but in the first time in about 2 weeks, we've now flipped bearish, right? So what do we have to do? Now our external swing changes, right? So this is no longer classed as a strong low. It's the opposite, in fact, because we've broken this market structure. We've created a change of character, and so now we need to get our mindset into thinking the opposite, right? So what we do is between these 2 points, right? This is still a swing. This is now, let's bring this down here. This is now weak, so we expect weak to break always. External strong, external weak low, and now this is what we anticipate as a weak high, right? So we make this a weak high. Oh, my apologies, I've got the wrong way around. The low we expect to be weak, but this we expect to be strong. So the external strong high, right? So there's our new swing range. Of course, you'll see it changes here because I've already got it on the chart. I'll tell you what, let me just get rid of them because I don't want to. I don't want to make these. It's better if we just analyze it as we go, right? In fact, I'm going to get rid of all of these dots because I think they're probably going to cause a little bit of confusion. Now, you could say, isn't this just a smart money concepts and blah, blah, blah? Well, possibly. But the way I like to think about it is it's market structure however we want to see it, right? It's whether we decide that it's some new idea on how markets move, or if someone just creates some new concepts. It's not really concepts, it's still market structure. It's always been market structure. So we have a weak low and a strong high. You can't, these dots and the importance of our market structure, you've always got to remember, you can't just say, well, isn't this a new lower low and a higher low? No, because you haven't broken the previous structure, which is here, right? That was the previous, this was the previous swing. And you'll get, if you don't figure this out and you don't get this right, you'll be on the wrong side of the markets each time, because now that's still a swing high, right? This is now the new swing low. The only time that this comes down to the next highest point is when we break this, okay? And so, now we need to go the opposite way. So that's our strong high. So really, we anticipate that this is going to hold, and we anticipate that this is going to break. Always the way, right? Let's continue. Now is a good opportunity to start thinking about internal market structure, right? So if we're thinking about trading, right now we're only thinking about kind of swing moves. But how's about if we want to trade? Because we anticipate, look, from a value perspective, we should anticipate that we come into this range here before a major swing comes back down. And so because we flip bearish, we know that this is going to break, but we expect that we should start to see some level of move to the upside for value to get back in, and you can probably find some sort of, well, you can see here straight away you've got huge imbalances here, right? And what would we call that? We're on the 1 hour, so you'd say 1H supply, because it would be a selling zone, supply zone, or we can call it imbalance, call it what you want really, but it's all the same stuff. We know what it means is because there was an overwhelming excess there, that people who wanted to short at that point may have missed their opportunity. So we anticipate the price should come back into that zone. So just as an idea, we'll see how that goes. However, we don't pick the imbalance, we actually pick the first candle to trade from. But the problem we've got is this is a liquidity zone here, right? So you've got this nice kind of inducement pattern down the way as well. So we may want to come up and collect some value here. So I'm not saying I would trade this zone specifically, but this is the demand zone, so the supply zone. But we've got liquidity built all around here. We know that this is a strong high, so I would never anticipate that price is going to break this until it does, And so we don't, what we're anticipating is price is going to come somewhere in this region. It's a zone that's a discount if you're selling, but equally we've got some liquidity, understanding that we might come up as high as here. And so always, whenever we're trading, we have multiple ideas and multiple zones. We might want to target this zone. Where would we target? Well, what I tend to do when I put a target in is I target the actual supply zone itself, the start of it. So I would have a short position here, and then I would have a very close short here, and I'm always going to target the weak low, right? Because that's just what we anticipate to break. However, because we've got liquidity here, perhaps another idea is that if this gets stopped out, and let's say I risk $10, let's say I risk $50, $100, it's an acceptable loss, right? So I'll go into this trade accepting that loss, because the risk to reward is obviously a much higher idea, and a lot better. So you can, what's that? That's a 9-1. But let's just say, because we've got liquidity here, that this might be the next zone that I'm targeting. So that's it's the wrong way around. Somewhere there. I don't believe we'll break the high. And so again, that's where you might want to go. Now, let's just see what happens. So what's next? Let's hit play. Let's just tidy this up so we know where we are. This is external weak low. Just bring this back a little bit. Okay, let's see how we go. So let's continue. Guys, feel free in the chat to ask any questions along the way. If there's anything that you need me to drill down on a little bit more. It's about the concepts here more than anything else. Understanding, that you understand the direction. Like right now, just to kind of I know I keep going on about this, is really important though. Right now, whenever new market structure presents itself, you always have to flip the script between what's strong from a sign of strength, or what's weak from a sign of weakness. Like, I'm not going to start shorting at these areas simply because market structure is now flipped bearish, because we had this change of character, right? This is where markets were bullish for a long time, and then we broke this. So now you've got to get your mindset to thinking, okay, something's changed. Now we may start to flip bearish. Now everything is fractal, right? So we have the daily, then the 4 hour, then the 2 hour, then the 1 hour, then the 15 minute, and so on and so forth. So what might seem bullish or bearish on the 4 hour, you've got to also go back as well. So what's the overall? And you can keep going down, up or down the line. But you've got to remember, what's my frame of reference? Am I trading daily? Am I trading on the 15 minute? Am I only trading on the 4 hour? So don't get too bogged down with the major direction, because you're always going to get ebbs and flows anyway. Just need to filter it down to what you're thinking from your perspective. So this is a weak low. Now, usually we anticipate price is going to come up to here, collect some liquidity, and move back down. It doesn't have to, of course. We don't necessarily need that to happen. We would like it to happen from a trading perspective, but we just don't know. So let's click play. In fact, what I'll do, right, so now is a good point to start thinking about internal structure. So we have this weak low here. I'm going to take that magnet tool off, it's really annoying me. And we've created a higher high. Right? And so internal weak high. Why is it weak? It's weak because we're bullish, right? So we expected that to break. Where's the low? It's here, right? It's the lowest point. We expect this to hold, right? So again, when we're looking for opportunities at a smaller time frame, this is what we anticipate to hold, right? And we think price is going to come back up to here, which is a strong high for value. And so this is the opportunity starting to move up, but just having a recognition that, there's going to be many zones. This is a big liquidity area here. You've got a lot of equal highs, a lot of these kind of points where you're going to have a whole host of liquidity being built up. And so markets usually like to gravitate towards that as a magnet, right? So what's this? This would be a strong internal low. Okay. Let's continue. Let's zoom into this price action so it's nice and clear. Wick doesn't really count. Okay, so now internally, what have we done? We expected the week to break. The internal structure, like I said before, is a really important concept. That internal, each structure, fractal structure from higher to lower becomes less strong. So like the 15-minute is not as strong as the 4-hour, as an example, or a 1-hour. But now we've got new internal structure, right? So this can now come down to here. And now we can put a new red dot. Where is our dot? The good thing about this is because you know it's weak, you always anticipate it for it to break. Now, obviously, we made an internal high here. Now that we've made a new internal low, that's also, we can just remove this for a second. Our new internal high is going to be here. But it's weak. We expected this to break. So let's continue. Our new high is here. So we expect that to hold. And now we'd be looking for zones here. So can we see, we can see a small zone here, right? So between these two, you can see that there's a small zone of imbalance on that 1 hour. And so where would we target? We target here. However, we have liquidity here as well. So you've got to be mindful of the fact that that might happen. So let's just bring these down. I would probably just give me stop a little bit more breathing room. Just get rid of this one right now. Let's do something like that. Weak high, weak low, weak external low, weak internal high, because we expect price at least to come up for some value. The internal strong low is also here, so we can't use that yet. Let's continue. Okay. So, right. Interesting point. So we've got to just go back a little bit because I wasn't able to pause that fast enough. Right. So we mapped this as that liquidity zone, the demand zone, right? This was the fair value gap, that little imbalance there. So we target that previous area. Now what we're looking to do, I need to just do this like a step at a time because we know price breaks through this here. Okay, so it's a wick. Does that count? Not really. So we still use this as our external low, right? Let's continue. I think we get another. No, so now we start moving to the upside, right? So internal perspective, I think I'll just leave that there for now. We'll click play. So we have internally a new higher high, but that doesn't count because it's a wick. Let's just press play, right? So this would have been a beautiful move, right? So we come into here, right, and just tag that perfectly because it was the supply zone. Although we had our stop there, where would we anticipate our move to be? Well, we'd want to try to target the external weak low, right? That would be our ideal. However, the other thing we've got to be mindful of the fact is, right, we've got this, we have this imbalance here, which you can see between the two wicks. And so I would probably want to target either the height, well, the actual candle you target is always the first candle that created it, right, which is here. And so I would probably just want to target that as my move to the downside, just to cover that point there. But now we've got some internal structure, right? We've still got our swings, but what have we got? higher high. Let's color these yellow. Higher low, that wouldn't count because it's a wick. Higher high, higher low, higher high. We don't know if it's a higher low yet because it hasn't stopped, right? So let's just continue to play. And that would have been a beautiful trade, right? That would have been a just less than a 3-to-1 risk to reward. If I'm honest, dead straight, I would have had my stop there. However, from a confidence perspective, if I would have been more confident, I might have just done that whole zone, and that would have been a 13-to-1 risk to reward ratio. But I have to be truthful, right? I probably would have wanted to make sure I was underneath the strong external high, because we know that that doesn't. We'd expect that that doesn't break, right? We can't say we know it doesn't, but we'd expect for that to break. So that would have still been a nice trade, 3-to-1, whatever your risk was. So now again, you've got to think. Here's the external swing, but now we are internally bearish again, because even though price has moved up, we've got to now say, okay, well, this was our internal range. It was here and here, but that broke, and so our new internal range is here and here, and we can map these points here. So because price is really choppy, it's a difficult place to get in on a trade. But if I move to the 4-hour as an example, is our external low. I'll just move that down. It's difficult here. You can have this as the low, but where it gets a little bit challenging and a bit difficult is because, like, this is the 4-hour chart, right? And so you could say, okay, well, if wicks don't count, why are you putting that point there? It's relative to whatever time frame you're trading. Like, if I was to go to the 1-minute time frame, like, where are we? So realistically, the wick of that move. Sorry, guys, I know that's a little bit messy. Well, the candle close on the 1-minute is probably there, right? If I go back to that 4-hour, it's there. Is really, if we was to break it down to its lowest degree, that's probably where we are, right? And so, let's get rid of that. The internal structure is here. By the way, see this move here, I picked. I actually put that in the server, which was a really nice move. Came up to that point, and then I think I got out somewhere around here. I probably could have held on a lot longer, but for some reason I didn't. But anyway, so where are we today? So bring it up to kind of reality. So look, the swing points. Let me just take all this off the chart a minute. So we were bearish. This is where I thought actually we were bullish for a while. We broke that change of character. We went bearish, right? And then that's just a higher low within that bearish structure. And then there's the lower low. But now you can see the moment we've printed this high, which on the 4-hour the candle closed, we have a change of character, right? And so now the only thing that we should really realistically be thinking in our heads is, well, this is no longer weak, it's now strong, right? It's a strong external low. And this is a weak external low, external high. sorry, yeah, so we anticipate that this should break, because now, from our perspective, at least as how I see things, is we've got this now was green, right? So this is the first break, and so prices come down. And if we think about it logically, it's like, okay, how would we think about a move here? So we know we can just kind of figure out that we want to be in this zone, and we're already in this zone, right? We know that this is the week high, and so we'd expect that that's a break. And so where are our areas of supply and demand down to these levels? Well, right now, that's already been filled here. You can see what was previously a demand from this wick here to that wick there. And what do we always do? We cover the candle below, right? That's that candle there. So remove this really quickly. You can see that would have been a nice move, right? To come into that zone, come back up for a little bit of a higher low on the internal structure, and it's coming back down again. So you might have just got a nice little move internally. You know, you're not going to hold that yet, because we want it to come down as low as possible, right? We want it to come down to these zones. This is where you're going to get, because of the swing structure, right? We know that that's a weak high. We expect that this is going to hold because we flip bullish. This is really where I want to be thinking about a long. Where are we going to come into here? So now we've got to try and figure out on the lower time frames. Do we have any good demand zones that we can utilize, right? And so 4 hour has already been nuked. You can see it's been closed, and we've actually came into that candle there. Let's go into the 2 hour. Do we see anything on the 2 hour? Nope. What about the 1 hour? No. 30 minutes. Very small on the 30-minute. You can see that's the wick there, right? And then that's the wick there. So we have a small imbalance on the 30-minute, right? So where would we go? Where would we target? We'd target this candle here, right, for a long position. So somewhere in this range. What would we anticipate? We'd anticipate that this external strong low, we already know we're in a nice zone for longer now, because we expect, because bullish structure, that this is the zone we want to target. So this would be the area. So somewhere between 28,829 down to 28,755. Does it get any more refined? Let's go to the 15-minute. Not really. The 15-minute provides that same move, right? Slightly less, but it provides that same move. So for me, I would be targeting this move to the upside from this zone, specifically this zone. That's that 28,8147 to 28,755. Now I'm going to leave it on the chart, because I'm going to see, on the next live how well that was. But market structure's been bearish. Am I going to put a limit order in here? No, I'm absolutely not. I'm going to look at market structure, right? So I'm going to go higher low. Let me make that red. Sorry, lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So internally, just like the swing, we absolutely expect for this internal structure to break, right? Internal weak low, and there's the high here. So what do we call that? We call that internal strong high. So this is the current trading range. So you might again, if you're thinking about kind of snipes in and snipes out, you're looking for, the same, right? Where can anyone spot where the supply is, or the supply zone on the 15-minute here? So if we anticipate price is going to come back down, it might come back up. Where would we expect price to come back into? Well, if you said this candle here, you'd be right. So this is where we want to take a short from, expecting that this breaks on the internal. Let's see what happens. Of course, that broke, so that wouldn't have been a great trade. I forgot I actually zoomed back out, actually. Well, this will be interesting, won't it? Because now this is that zone that I said I'd want to long from. I don't know if we came back to there. Let me just see. Let's just colour that yellow. Colour that one yellow, just to denote our strong swing point. Okay, so internally, we've now got an internal swing, right? So now you can say that this is a weak uh, internal high, and this is a strong internal low. So now we'd anticipate that this is going to break and the external high, but where would be our zone of interest to get in? You know, imagine this is live and you're analyzing the charts. I don't see many opportunities on the 15-minute. And so let's just play it out. So right now, we anticipate that this holds and this breaks. But remember, lower time frame strength and versus weakness is not the best reliable. The higher time frames are the ones for that. There was that move there, caught that nicely in terms of that demand zone, like we provisioned. But I guess the question is, how long would you hold it? You've got some liquidity here. Now remember, I always like, whenever I'm putting my orders in, I always like to go I expect that strong to hold. There's no more liquidity here, and so I would only have that there. Question is, what would I have my risk to reward to? Well, you know, really you want it to be at least a 5-to-1 risk to reward, but I'd also expect for it to come and collect the liquidity above here. So maybe you can just stretch that a little bit higher because of where we expect that liquidity to come in. I may be wrong, let's see. This is audible at price action, very, very choppy. Let's just see where we're up to. But that's already, it would have been at least, what's that, a 5-to-1, which is what I normally like. But we wanted to see if we can break and tap into this liquidity, right? Let's just get rid of this. So that we would have been stopped out there. I mean, it depends on your own version of whether you would have held on or whether you would have taken profit. But we would have at least got a 5-to-1 if that would have worked out nicely. So let's just do some more analysis where we're at. So the internal strong low didn't hold, but the external strong high still has, because we don't anticipate that that's a break. Now the argument is that's where the candle closed, that's where the wick is. So it's debatable on way. I don't think there's a right or wrong way, but let's just go with the low there to the wick for now. Typically, you don't classify wicks, but again, it's all down to time frames. And so the jury's out on whether it's right or wrong to go to the wick, or whether you actually want to continue it. So that's our break. So our internal low would have been, our internal high rather, will be here. So with market structure, you've always got to look at what's the previous between the two ranges. Where's the high? If you're down, and if you go in the opposite way, where's the low? So what do we think now? So we're thinking now we do have some. So this here would have been so this is a little small area where you'd probably get in on a move to the upside if price wants to come back down. There's a little tiny bit of well, there's a big imbalance, but the candle that caused it was very, very small. So again, if you were thinking about going long because we expect the weak high to go, then this would be the area. Are there any more areas? Let me just zoom in there really quickly. No. No, that's covered. So that would be the next in small time frame based opportunity. Again, you just depends on where you could be really cute and go right tight to it. I won't. I'll just go below this liquidity here and see what happens. Didn't come that down and tap the zone, but what we did do is we knew the weak high would go right internally, and so what do we anticipate to happen next? So that's the external high. Actually, that's not. That's the new external high. My apologies. There's the external weak high. So we expect that breaks. We should always expect that the weakness to break. If it doesn't break, it's a change, right? It's just a change in terms of the momentum of the markets, and then you swap. So this is the strong low. This is the weak high. We got a nice order there. There you go. Breaks. So that's the new strong high. Sorry, weak high. This is the new strong low. So what do? We just move. Let me just pause. Oh, damn. Didn't pause. Let me just go. Seems to have zoomed back in. Okay, let's talk about current day measure. Let's talk about current day where we are as we see it now, right? So that's a 15-minute demand zone. I've already marked that out on the chart, and we have a new zone here that I think we'll just check in a second. That's the internal strong. There's the new high here. So I know these colors are a little bit off-putting right now because they're not the right colors, but let's change that to green. Change that one to green. So we have pretty much bullish structure on the swings, right? This is all the replays are over now. What the hell's happened there? Right. Let me just get rid of that. Let me get rid of that. So this is current day. So now we're talking about what's our trading opportunities for today, and how will we think about what we want to do. So right now, there's our external strong low. There's our external strong high. Sorry, weak high. External weak high. So we definitely do not. There's our weak high. We definitely do not anticipate the strong low to break, right? If anything, we expect that to hold. Change that color to green again. And so right now, price has been coming down, but we want it to come into that discount zone, right? So as deep as possible. So, already you can see that actually we are in that zone. But Here's the difference, right? This is a nice. I would say I shouldn't say this. You know, you are all the masters of your own ideas when it comes to trading. Let me tell you where I would like to trade. I would love price to come into, right? So right now we are half an hour from market open. Where's the tradable zone? So we want to look for demand, right? Demand means buys, places to buy. And we're always looking for where that inefficiency is within the market. So right now, here's your inefficiency right here, right? The reason it's inefficient, like I said, we've got this excess here that hasn't quite been closed. The box is where's the end of that versus the start of that? It's there. And so that is the gap. It only came in 50%, but we are not interested in the gap, are we? We're interested in the candle that caused it, like I said earlier on. It's here. Need to really zoom in. We're on the 15-minute here. Okay, just one more second. Here we go. Right, let's get this all the way across. Sorry, need to go high, longer. Right, let's just see what that puts us there. Somewhere like that. That is where realistically it's the only inefficiency down to the lowest time frame, 15 minutes, right? This is the inefficiency that I hope gets filled. And so, like, if you think about it, what we've been printing since we've made this external high and this strong low, strong because higher low, higher high, higher low, higher high, right? That's not technically a was a lower low from previous market structure, but we do that yellow because this is like swing realignment, right? So even though we went bearish with these two and then we printed a lower low, I'm going to just keep that yellow because we printed a higher high there, which then broke that trend, right? And then I'm going to keep that green because now market structure from our perspective at least is higher highs and higher lows, right? And so where's that is the trading opportunity. So internally, we've gone. Let's just change that to yellow. Actually, no, we've already got yellow. Let's go pink. Right. Lower high, lower low, lower high, lower low, lower high, lower low. And so, by the dictates of market structure, right? What do we expect? Well, here's our internal swing range, right? Our internal structure each time as prices move down, and this is really what it comes down to. This is what we would perceive as internally a strong high, right? Because markets are moving down, and we would anticipate this one here, this range at this low here, as a weak low, right? An internal weak low. So that would have been our range initially. But what happens? Just as we expect, it breaks, but we don't create this point here until this point breaks. So the range would have always been, we don't care what happens, right? It could do all of this. The moment it breaks, that is when we look at the previous high, and then we put that dot on the page, right? So the point now would have been, okay, well, what's our new swing range? So our new swing range is essentially, we're bringing this down here, and then that's our swing range. Then we create a breaker structure to the downside, so our new swing range becomes here. And then we break again. This was the high of that point, so our internal high moves here, and this is our internal low. What do we expect to happen? We expect the internal weak low, that should say. We expect that this should break, come into our zone, and then price should move to the upside, right? That's the move. That's the plan for today. So internal weak low breaks, something like this. It may come down as low as here for the liquidity, because you can see there's a little bit of price action here. So I'll show you what I'm going to do shortly. But let's say it takes the liquidity, respects the strong low, and then starts doing this. Where do we expect for that to go? To break the week high. That would be the general consensus in my idea. Now we just need to figure out in terms of the move what it needs to look like, right? So that's the inefficiency there. We don't have any further inefficiencies below there. But from a long perspective, so I'm always just getting to the start of it. I'm not going to touch the low. I think we don't. I don't think we break the low. But for me, it's just below this liquidity here. Maybe a little bit more lower. Maybe that's arbitrary. It's entirely up to yourself. No one really knows how low it would go. But you know what you want to do is say, well, okay, where's my risk to reward? Well, it's the week high that we expect to break, and so that move would be a 6.98. However, if you want to be a little bit more greedy, what you can then do is look at your 50% and say, okay, well, here's my entry, here's my bottom of where I would anticipate that it shouldn't go, and then really what you're doing is you're bringing this down to, sorry, no, let me just take that up. You're bringing this down to here. Of course, you run the risk of not getting an order filled, but you get a much better risk to reward because the position size doesn't change, right? The position size, whether it was $50 or $100, whatever you're risking, doesn't really change because that was your original stop anyway. The only difference is, that's now your new zone that you need to come. Well, you need to tag into that zone. Well, actually, you need to come into here. But that's my trade plan for today. I think that's a solid enough plan. There's reasons why I would anticipate the price comes back down to here. Market structure is in our favor internally because this is a weak low, so I expected that to break. The other way as well, interestingly enough, is look, even if you don't want to actually put that order in, and you can wait, and that's actually a really good plan because on every structure, what would be a change of character here, right? So lower high, lower low, lower high, lower low. Sometimes what happens is we break structure like this, right? So now you have a change of character, right? So here would be a change of character because internally we're no longer printing lower highs and lower lows. So we change that into a change of character, and this is what everyone looks for, right, in the market. We're on the 15-minute now. Then what do you do? Well, now what you're looking for, forget that this is the zone that we're interested in. Just imagine for some reason this was already tapped into that zone. So we're thinking, okay, we've got one thing going our favour. We're happy about that. Now we want to know when to get in. But we've had this change of character now, which tells us potentially that the internal structure is over. But what we do anticipate to happen is that we come back into some zone, right? So, like for example, if we zoom in right here, what do you see? Can anyone spot where the zone that we'd want to target is? Here's our gap here, right? Here's our imbalance. But we don't want to target that. We want to target this candle here, which was the candle that started the game, right? So, once you break that, once you get that change of character, where do you anticipating price to come back down to? Back into that demand somewhere, and then create a new higher high. Then creating a break of structure internally, which is great because then you've got confirmation. Your order's gone in here, but you can do this in a very fractal nature, right? You could go down to the 1 minute time frame if you thus wish to do, and really start to see, okay, well, lower low, higher low, lower low, higher low, lower low, higher low, lower low. internally, what do we get? A change of character there. And then price comes back in. Where's it going to come back into? Hopefully the zone, and price can start to move up again. So you can do this on the 1 minute time frame. You can do it on any time frame to get really close control in terms of your orders. But sometimes it's just about, well, expecting that price is going to come into your zone and you get a reversal. Sometimes people can't sit and watch the charts, and so if you can't sit and watch the charts, then that's your zone, right? And then you're going to look for, go back to the 15-minute. You're just going to look to make sure that your stop accounts for any potential liquidity that might come into the market where price expects to go. But that is the plan for today. Come into that zone. Stop loss here. I don't anticipate the external low to break because market structures flip bullish. We've created exactly what we want to see, a series of lower lows and lower highs. Hopefully it comes into that inefficiency here, and then we can expect price to break. Confirmation would be that we get a change of character, and then we start moving to the upside. So is there any questions from anyone in the chat? I think there's currently 3 in the chat. So feel free to drop any questions you guys might have. Do you agree, disagree? Whether you do or don't, just have your eyes on that zone. Just see what happens when we come into this zone here. That zone, I'll colour this. I'll leave that there, right? I'm going to call it demand zone 15-minute imbalance. And so let's see, that's where my order's going to be, and then maybe I'll dive on tomorrow and we can review how well it was. But it's just basic market structure, really. It's nice to always be able to have a plan with confidence. Whenever you're approaching charts, like where's the strength, what's the current direction, all that good stuff. I think that's it then. I think that's it for this one. I'm just about to release a full edited video all about this, and kind of, I know a lot of it's kind of a little bit scatty when you're kind of whizzing through it, but I'm going to cover this in great detail in an upcoming release, so should be good for anyone who's wanting to trade in this kind of manner. But that being said, I think I shall leave this one there, my friends, and I shall see you all in the next one. Speak soon.